Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Community video interview series. I'm Elliott Gotkine, and today I'm joined by the co-founder and CEO of Sygnum, Mathias Imbach. Great to have you with us.
Thank you for having me. It's great to be here.
Lovely. Okay, so before we get cracking, we are going to learn a little bit more about Sygnum. So, Matthias, for those who know the name but perhaps not the full story, what exactly is Sygnum and where does it sit in the digital asset ecosystem?
You can think of Sygnum Bank as a digital asset banking group, which is we've rooted from the beginning across Switzerland, in Europe and Singapore in Asia. Since then, have further expanded into the Middle East and Abu Dhabi, but also Liechtenstein and Luxembourg. With the regulation first approach, we provide an all-in-one account approach towards digital assets, that is cryptocurrency, stablecoins, asset tokens, and integrate them seamlessly with today's banking infrastructure. So we are a bank like any other bank with a full license, but apply from a technology and procedural standpoint that across the entire universe of assets. So you can have fiat, traditional securities, as well as a Bitcoin on our platform.
And so, is being an official bank with a license, is that a question of just giving your clients more trust in the digital asset ecosystem? I mean, what's the difference from a practical perspective? For me, let's say, if I was going to keep my crypto with a crypto company, in quotes, and with a digital asset bank like yours.
Yeah, so our core mission has always been to empower everyone to own digital assets with complete trust. And one element of that trust is that whatever happens, the assets is yours. And so, as per the Banking Act, and that is one of the core advantages of having your assets with the bank, is that as long as they're off the balance sheet, so outside the balance sheet. And as a result, whatever happens to the bank, including ourselves, the assets are segregated and bankruptcy remote. And that is a key difference, for example, vis-a-vis holding assets or crypto assets on a crypto exchange, as we have seen in 2022 when, for example, FTX imploded. So that is a very core value proposition of the bank. And of course, in addition, with that, there comes a lot of auditing and transparency, etc., which just helps build trust towards the clients, particularly institutional clients that are not used to anything else.
And do depositors get the same protections they would if they were depositing fiat in a bank? Their savings, of course, would be protected. Is that the same if they're depositing kind of crypto savings with you?
So, the beautiful thing is cryptocurrencies in particular, they're 100% off balance sheet. So whatever happens to the bank, they're fully segregated. We don't do anything with them, right? So there's 100% at any point in time, we need to be able to give back these assets to the client. And on the fiat side, it's the same rules as to any other bank in Switzerland applies. There's so-called SE Swiss, which there's a deposit protection per account and per client, also on the fiat side. But that's then still the on-balance sheet treatment. So on-balance sheet is different from off-balance sheet, and off-balance sheet means it's fully segregated and off and outside. It's bankruptcy remote, basically.
Okay, well, I suppose that's all good for reassuring clients. But I mean, in terms of numbers, can you give us a sense of you were early to this space, and I think you claim to be the first digital asset bank. Give us some of the numbers. What are we talking about in terms of deposits, in terms of growth, in terms of profitability?
Yeah, so we are about 5.5 billion in assets right now. We launched in 2019 as a bank, and we are 280 people across Switzerland and Asia, and we had last year around 90 million in revenues. So that's to give you a bit of a sense of where we're at.
Okay, all right. So we've heard about Sygnum. Let's now learn more about Matthias. So, Matthias, you've said that had you known, if I'm not misquoting you here, that had you known what was involved in setting up what you say is the world's first digital asset bank, you never would have done it. And the risk-taking in your career isn't a particularly Swiss thing to do. So why did you do it? And what would you have done instead had you not done it?
It's almost like, let me answer it in two parts. So the first part around my message that I would not do it anymore is to be understood as follows, right? It was a big advantage for me to not have worked in a bank before co-founding one, let alone one in the crypto space and in digital asset space, which adds an additional layer of complexity to this mission because it's a different new field, an innovative field where it has never been done before, which brings more complexities. And so I had the advantage of approaching it in some shape or form together with my co-founders quite naively. And I don't mean the word naive in a negative sense. I mean just thinking through stuff in a new way, not knowing some of the hurdles that we have to approach and overcome, and sometimes not knowing things that will happen down the line that is challenging frees you to just do it and to not be scared of it and to not hold back and to wanting to innovate and to just get stuff done. It's a bit like the paper problem. It's a problem, but it's not a wall. You just walk through it sometimes, and so that's how it felt to me. Now that I know what it means after these 8-9 years, I must admit I will most certainly not co-found or found another bank, because it can be very daunting and it's very, very difficult, and the chances of success are, I would say, very low. I now am lucky enough that we have been able to establish ourselves and can be on this growth journey, but there could have been very many other outcomes as well. In terms of risk-taking propensity, right? I grew up in Switzerland, but then studied economics, business in St. Gallen at LSE in London. So I started with Bain and Company. That's a very risk-averse, kind of approach, standard career. It was fun. It was interesting, but I also had this angle of India. I had early exposure to India during my studies. I got to know Ratan Tata, an Indian industrialist who unfortunately passed away a few years ago, but has become a big mentor and friend, and later also my boss. So I had the chance to run his family office, and as a result, my approach towards taking risk has really changed, because if you move from Switzerland to India, you learn to deal with ambiguity, and so that kind of opened up that world of entrepreneurship to me.
Right. Quite a mix there. And I think also you've described being a founder as constantly oscillating between terror and euphoria. I mean, what's been the most terrifying thing about founding Sygnum and running Sygnum, and what's been the most euphoric thing?
I don't even think I can pinpoint this one particular thing. It's really the constant oscillation, and it's pretty much on a daily basis, and some of this oscillation is a bit more nuanced, some a bit more amplified, but it's just constant fighting of the many challenges that come with building a business. In the early days, it's about, will we survive? Will we get the next funding round done? You have a lot of personal challenges as well, in the sense that people that may disappoint you, not finding the right talent, etc., and obviously operational challenges with clients, lack of traction during difficult market phases, etc. So that's what I mean. But then on the other hand, you see your team growing. You see the young people taking responsibility, really building stuff and taking ever more responsibility. You see the successes, the first big client inflows, great technological innovations, recognitions, banks that are now working with us, etc. So that's then the euphoria part, and I still till today have them every day, probably a little bit of both, quite frankly. So it doesn't really change. Yeah.
Never a dull moment. And just finally, I mean, it sounds all kind of encompassing, running and founding a digital asset bank, or any bank for that matter. I mean, do you have time to do stuff outside, and what do you get up to when you're not focused on Sygnum?
Yeah, I try to. Obviously, it's a big part of my life. I always say entrepreneurs, they have a life, and they don't talk too much about work-life balance. They just, because it's part of your life, and you integrate the company in your life. It's, in my case, one of my babies. The more important babies are my two real babies, my two daughters, and obviously that's also whom I spend, my wife and my two daughters, the time with when I have time. And otherwise, it's my friends, it's sports. So I'm a passionate runner. I have my gym, and in winter as a Swiss, of course, lots of skiing.
Of course. All right. So look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we're going to continue our conversation with the Sygnum co-founder and CEO, Mathias Imbach. Welcome back. And don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. Okay, so now, Matthias, let's talk about the future of finance. So, Matthias, with so much happening in the world, from SpaceX's IPO plans to wars, crypto seems to be slightly less in the public eye right now. What big developments have been happening in 2026 in this space that perhaps might have passed those of us who aren't specialists in the space that might have passed us by?
I would say there's maybe three. One is that in the background, the institutionalization of the piping of the infrastructure of the integration of traditional finance with future finance, with digital asset enabled finance is in full swing. When we look at our B2B business, but also what is publicly known, all the large banks, they are really working on the piping, on getting custody up and running, on working with stablecoin consortiums to get these rails up and running. So this is never been anything close to these kind of initiatives happening at the same time before. So in that sense, this is very, very positive. This is obviously now the long game. This is the real institutional piping that is much advanced but not yet complete. And so many of the banks are really working. We work sometimes for 18 months with one bank to integrate, right? It's not trivial to particularly integrate with older legacy systems at 24/7 kind of infrastructure, but they do it now. That's one. Second, I would say regulatory-wise, of course, everyone is watching the US, and the Clarity Act just made a big next step last week, or actually maybe it was even beginning of this week, and so we are confident, or I'm confident that this will be resolved and obviously unleash further innovation, because there will be much more clarity in the US, not just within the scope of stablecoin, but also more broadly, what is the security, what not, what is within the realms of SEC versus CFDC, etc. And then maybe in terms of innovation at the technological level, it's really this obviously also leveraging AI and this is at the procedural level. All crypto companies, including digital asset banks like ourselves, we're massively working on kind of rethinking the entire organization and the client life cycle, leveraging AI. And in particular, I do feel that the convergence of AI and blockchain is going to lead to potentially one of the next kind of aha moments where people realize that probably in AI-based systems, when it comes to transactions, it probably makes sense to leverage the blockchain. And so the whole agentic payments topic is what we're also investing a lot of time and effort in. It we believe will be a significant use case in the future.
Okay, I mean, I was going to ask you about AI a little bit later on, but since you brought it up, I mean, given all the things that AI is already doing and the things that we expect and hope that it might be able to do, does it really matter to the end client, whether it's an institution or whether it's an individual? I mean, if you just press a button and say, okay, ChatGPT or Claude or whatever, you're using, go and do X, Y, Z for me. I mean, it'll just do it. And whether it's, simplified or faster because it happens to be over a blockchain, or whether it's using more traditional methods, it'll get it done. And you as the user won't really be bothered either way, presumably. So why does combining AI with, digital asset space, why does that make any difference if AI can kind of solve all the other problems that are with the traditional finance system anyway?
So I would structure my answer in two parts. One is I fully agree with you that it doesn't matter. It doesn't matter in the sense that people don't need to know what happens in the background, because it will be text-based. It will be really chatting with someone, right? Either verbally or in text. And in that sense, people don't need to know whether there's a blockchain, ultimately, something happening on the blockchain or not. But what we believe really matters is how fast and how efficient things can get done. And it just makes much more sense to be able to transfer money within seconds versus a T+2 around the globe, and that doesn't change if whether it's AI initiated or analog almost. It just makes much more sense to be able to do this on a 24/7 basis, particularly in a world where agents will start to work for us 24/7, not just during the day, 9 to 5 during office hours. In addition, I would say, particularly when it comes to financial services, maybe a bit differently from other elements where we in our areas of life where we we use AI already now and will do much more in the future, is the fact that this is about money. So this will remain highly regulated. This will not be fully decentralized and everyone just doing whatever they want. And probably people will also want to have some element of control. So what we, for example, tested, we also announced it just last week, was that we have already an interface with the LLMs where people can literally do transactions, complex transactions via just chat function. But there's always the element of the human interface that has to accept ultimately the proposals that the AI gives them, because you want to know what happens with your money at each step. And so it's come as a human guided AI in a sense, what we believe in.
So AI agents haven't taken over just yet. But look, I mean, one of the ways where I suppose you would argue that things will be much faster is, of course, with stablecoins, especially for international transactions. I'm just wondering, now they're becoming more relevant for payments and treasury and the like. I mean, how big a shift are we seeing with the adoption of stablecoins right now, and how big is it going to get?
It has, I mean, the growth has been phenomenal over the last few years, in particular the last 12 months since the Genesis Act has been passed in the US. This was the big unleash. I mean, it was a combination of the US stating that there will be anti-CBDCs, so they do not want a central bank digital currency. That was another push saying, okay, they're really going down the US dollar, USDC, USDT, but probably more USDC route, kind of the stable coins. And this is a means of trying to sustain and further embed US dollar dominance. We have a country that has significant debt, right? And as a result, someone needs to buy these US treasuries. And when you look at players such as Circle, but in particular also Tether is the 7th largest owner of US treasuries. So it's a means of establishing or continue to keep the dominance in USD. And if you now look at the stablecoin market overall, about 98 to 99% is in US dollar, right? So the rest of the world is still figuring out how we can catch up with this.
Well, that was exactly my next question, because almost all stablecoins, as you noted, are in USD, and only a fraction, less than 1% by most accounts, are in euros.
Yes.
Are EU officials like ECB President Christine Lagarde right to express concerns about reliance on non-European payment rails potentially undermining European sovereignty?
I think it's a relevant question, right? It's ultimately, I mean, in the past, I mean, already now, I don't know what percentage, but it's clearly more than 50% of global debt is denominated in US dollar. And that's basically the same thing. If you lend someone money in a certain currency, the currency that in which you issue that debt is obviously dominating. And so in many ways, what that fear that has been mentioned is in some ways already reality. And now it's about what I think doesn't help is noting it and not doing something about it. And what one can do about it is to create frameworks and regulations that lend itself towards innovation and letting the private sector actually innovate and make sure that also other currencies are being issued on chain. And maybe the US is typically a bit better and faster at doing that. I mean, the US has basically decided that they want to have the private sector drive that innovation and backing it. And I know with the MiCAR framework, Europe also tries to do that, but let's just say it's heavy to fulfill all the requirements here.
So rather than kind of, bemoaning the situation, they need to get a move on to do something about it. I mean, as you say, Europe, Asia, the US are all trying to shape these new rules. So fair to assume, I mean, which jurisdictions do you think are getting the balance right between innovation and oversight? Is it kind of, has the US gone too far in terms of innovation with not enough oversight, and the opposite in Europe? Or are kind of, is it really just everyone ought to be following what the US is doing?
Well, they were late, particularly when it comes to digital asset. There was obviously the Gary Gensler era, right, in the SEC prior to Trump taking over, where there was just the opposite. Basically, the US falling behind and not doing much, or the players could not do much. And then this maybe reaction or overreaction. Maybe it's just also trying to overcompensate what was happening of the 4 years before, and now really catching up, and sometimes in some areas overtaking. But when you then look at the details, is it the detailed rules, etc. I can still say today, because this is the country I know best from a regulatory standpoint. In Switzerland, for example, we have much more detailed clarity of the intricacies of managing cryptocurrencies and particularly also asset tokens in a banking, a fully regulated environment. There's also countries such in the UAE, Dubai, Abu Dhabi have done a lot of work in it. Singapore, Hong Kong, that is pushing hard on this. So I would say it's not just the US, but with being the largest capital market in the world with a big margin, of course, what they do matters also most.
Right. Okay. And just because I need to wrap this section up, but so maybe you can give me like a 1 or 2 word answer. I mean, how do you see the relationship evolving between traditional banks and digital asset native firms over the next 5 years? Are we talking partnership, as I think you've already said is already happening? Is it competition? Is it convergence? Is it a bit of a mix of the three?
It's a bit of both, but I would clearly say the dominant factor will be partnerships. It will be integration. It will be banks realizing they need these rails and that many will not be able to build all this infrastructure themselves. We see that in our case, but also our friends and competitors, that there's a big growth area, and most banks are moving this element from the innovation hub to P&L relevant and truly starting to put real money behind and getting it done.
Okay, so look, it's time now for our round of rapid fire questions, Mathias. Are you ready?
Ready.
Excellent. So I've got 90 seconds on the clock. I'm going to start the clock, ask you as many questions as I can. 1-word answers is all I'm after. We'll try and get through as many as we can in the 90 seconds, and then we will wrap things up when my alarm goes off. So away we go. What fintech segment, in your opinion, has the biggest potential over the next 5 years?
Neobanks.
What is the biggest pain point in your everyday financial life that you would like to see resolved?
Scalable compliance.
Are bank bosses ready for the AI revolution?
Some.
Are customers ready?
Yes.
Do you think European and US regulators have kept pace with all the new possibilities and behaviors we're seeing in the financial industry?
I would have different answers for the two.
All right, yes and a no, maybe. Have you personally ever invested in crypto? I think I might know the answer to that one.
Well, yes.
Are physical point of sales part of the future of finance?
No.
Are bank branches part of the future of finance?
Not fully.
On a scale of 1 to 10, 10 the most likely, 1 the least likely, how probable is it that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank, out of 10?
8.
That central bank digital currencies, CBDCs, will become a mainstream reality in the US or Europe, again, out of 10?
US 0, Europe 5.
That you'll be able to open a crypto account at a top-tier bank?
10.
That SWIFT will still be the main tool for transferring money around the world?
6.
That a new card or non-card... Oh, we're going to finish this answer. I started, so I finished, as they used to say. A new card, the likelihood that a new card or non-card-based rival will emerge to challenge Visa or MasterCard?
2.
All right, well, that's good news for Visa and MasterCard at least, but that unfortunately is all we have time for our round of rapid-fire questions and for our conversation. So I really just want to thank you, Mathias Imbach, co-founder and CEO of Sygnum, for joining me today. Thanks so much.
Thank you, it was a pleasure.
And for everyone watching, we will be back again next time with another big name from the world of finance and technology. We do hope you'll be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on X at Paris Fin Forum. That's all for now. See you next time. Bye-bye.